determine the course of transition to green, resilient, and inclusive economies. In this session, we will tackle the question of finance to enable and accelerate just transitions. What we have over here is a panel which is diverse, which will perhaps give you deep dives coming from their perspective. We have Gwen on my right. She's the managing director of EcoBank Cameroon and CMAC, and she's just taken over the job of her boss. So she will tell us more how she's going to transform the region that she is looking at. Then it is Malchi Sen. She is the associate professor in the University of Seychelles. Then we have Olga, who is a climate change specialist and has been looking at developing countries, especially her focus is on urban spaces. And we have Manat, who probably all of us know, but she is the associate fellow at Observer Research Foundation. But before we start, I will just take a couple of minutes to set the context and give you a snapshot of where we are. There are a few stats that I'm going to throw at all of you. It's good. We begin our morning with some numbers. One of the beginning, the number that I want to start with is the size of the green economy. By market capitalization, it has touched about $7 trillion USD globally. Of course, there are regions of concentration where this is more progressive, where this is more thriving, and that is the US and, not surprisingly, China. It has been growing at the rate of a compound annual growth rate of 14%, but we need it to triple in size to be able to meet the net zero goals and climate targets. The other thing that I really wanted to press upon was the interconnections. Interconnections between energy, food, water, biodiversity, and climate are absolutely critical in looking at this green economy holistically. And still, if it doesn't provide net positive gains for people, it'll remain fragile. It'll remain inherently fragile. And hence, investment in green economy makes complete sense. Now I'm going to tell you some numbers where this investment is happening, what are the kind of climate finance flows that we are looking at, and this is as late as 2021 and 2022. These are the studies done by ADB and CPI. This will probably set the context for all of our panelists also. Total climate finance, there's some good news and there is some news which is somber, obviously. Total climate finance has steadily increased over the last decade, reaching around $632 billion in 2020. But the flows have slowed in the last couple of years. An increase of at least 590% in annual climate finance is required to meet internationally agreed climate objectives by 2030 and to avoid the most dangerous impacts of climate change. Come to adaptation. Adaptation finance, which is, I think, is also a major part of our conversation here, is really minuscule. In 2020, it increased to about USD 30 billion. It increased to around 46 billion from 30 billion in 2018. Just a couple of more stats, and then we are straight diving into the questions. Geographies and the instruments. The geographies where climate finance is located or is flowing within is Western Europe, the US. It is also, most of the climate finance is also is being mobilized domestically within regions. 3/4 of global climate investments were concentrated in East Asia and Pacific, Western Europe and North America, and rest of the regions only got less than a quarter. The amount of climate finance in Africa falls dramatically short of what is needed to implement its NDCs. In 2020, it was only 29.5 billion. With all of these stats thrown at us, I'll begin with you, Gwen. You are a practitioner. And that practitioner's perspective is extremely important since we have been looking at sources both which are public, concessional, and private finance. Climate change can expose financial sector in aggregate, as well as financial firms, to a lot of risks. As well as it can create opportunities for growth through sustainable financial instruments and lending and investment. As a practitioner, and as coming from this region and your experience, what do you think the banking sector understands do you think the banking sector understands it as a business imperative? So could you just give us a clue of what is happening in the region and from your experience and context?
Okay. Thank you very much for that question. I think anybody who knows the financial sector knows that anything that impacts the global economy impacts the financial sector. Because if the global economy thrives, then the financial sector will thrive. So with climate change, you see people's wealth, nations' wealth being impacted. Resources are being depleted. Energy prices are going up. So therefore, the financial sector is aware and is implicated. The second thing is that climate change is a huge emerging risk because all of our businesses, starting with the financial sector's business as a whole, our infrastructure, our branches, our people, our communities, if the communities, for example, in which we are operating are impacted by flood or extreme weather, the financial sector is impacted directly. If there's any issue to our infrastructure, our network, the platforms that we use to operate, if there's a storm and there's a crash, we are directly impacted. So when we talk about natural disasters, and climate change, we should not think about it in a very high-level, sexy way. You need to bring it down to the basic. It's weather. It's a disaster that happens, and how does it affect the business that you're operating? So this is just to say that the financial sector takes it as a huge business imperative because, first of all, it's affecting our business. It would affect our bottom line. Once our customers' businesses are affected, then the bank is affected. Now, how do we manage this climate change risk? That's the question. We have two folds that we have to look at. First of all is understanding how we analyze it. Because normally in analyzing risk that we are lending, we look at credit risk, foreign exchange risks, known risk, I'll put it in quotes, that people have known in the past. Now, climate change risk, that is something new. How do we analyze it? How do we bring it into our credit policy? How do we give our people the capacity to learn, to know what they have to analyze? How do we educate our customers to know what they have to do so that they can remain credit worthy for us to give them credit? The second thing is the transition risk. Because we are moving to something new. We already have existing products and services, and then now they have to transition to be more in line with the low carbon emission, to be able to finance. And are your regulators already ready? So all of those transition risk aspects have to be analyzed. And then, how do we as an institution be in line with the UN sustainability goals, because we have to be involved? And I'll just take the example of what EcoBank has done. EcoBank has a sustainable framework because we know that we have to participate in making sure that the world is a better place. We have to participate in developing our economies. We have to participate by getting our staff ready. So we have a framework. And one of the tools just to help ourselves, because as we said, there's a finance gap. Getting money to finance climate change is something that might not have return. And every bank, every financial sector, we are there to make money, to be honest. And when you have to finance projects that might not be profitable immediately, that might not have an immediate return because it's for, I will call it the ultimate good, it becomes a bit difficult. So we at EcoBank issued a sustainable bond of $350 million last year, and it was globally subscribed. So it was launched on the London Stock Exchange, but we had investors from the UK, from the US, from the Middle East, from Africa, because we needed to have a bond that we could use the proceeds to be able to finance renewable energy, finance the green projects, finance green-friendly buildings and the rest, and finance projects that are lower end, like I said, not profitable in the usual sense, but are necessary for us to be able to meet the climate agenda. So just as a short form to a short response to the question, are we aware, is it a business imperative? It is definitely a business imperative, and these are just some of the ways and the manners in which we're looking at it, and some of the frameworks that we have put in place to make sure that we are involved, we are alert, and we can actively participate to make the climate change agenda a reality.
Thank you, Gwen. And I think we have to also acknowledge that it is not only the banking sector, but financial markets as a whole, the entire spectrum within that, which is actually getting very, very active. The other thing that I wanted to also mention is that almost everyone seems to be learning at the same time. There may be a degree of difference between different economic actors in different geographies, but especially when it comes to finance sector, especially when it comes to regulatory, supervisory authorities, in understanding climate risk and integrating them, everybody is doing it at the same time. There is a whole spectrum of that in front of us, where some are more progressive, say perhaps in Europe, but perhaps in Africa and Asia, the supervisory authorities and the financial banks are almost in a similar place, as to put it that way. But you mentioned bond markets, and bond markets actually lend themselves more amenably to climate investments. But within that, one pocket of investment, which doesn't really see as much flow of finance, is adaptation. And I think I'll bring that question to you, Amalshi, because Seychelles has done something pretty interesting, innovative, in trying to take that opportunity and tackle adaptation through bond markets. Would you just like to share what you did and how actually and after, it was in 2018, I think, you issued the blue bond. But after that, have you been able to trace the impact of that financial investment on the blue economy as such?
All right, thank you very much. Just out of interest, who has been to the Seychelles? Excellent. I've been here 3 days and no one has told me that they've been, so I'm really happy that we actually have some positive outcomes there. So, for the rest of you, we are a small island developing state. We're located in the Western Indian Ocean, and we are trying to reframe our development as a large ocean state through our blue economy model. We are very tiny. We are 115 tropical islands with a population of about 98,000 people, roughly. So we are the smallest country to form part of Africa. And our main economic basis is really just tourism and fisheries. So immediately you notice that we have a dependence on ocean-based development. We have a dependence on our oceans, and we want it to be healthy for our future generations. And this is why we launched the Blue Economy Framework and Roadmap in 2018. Now, SDG 14 is one of the least funded SDGs out of all of them on the board. And in Seychelles, we are seeing the effects of climate change every day. We are at the forefront, we are the most vulnerable. And so we've undertaken a few steps here to try and confront it from the financing perspective. And as you mentioned, Neha, we've taken, I would say, innovative financing instruments, but they were pre-COVID. So let me go through it first. The first one was in 2015, where we launched the world's first blue bond. It was valued at $15 million, and it was designed with the help of the World Bank, and it had the inclusion of 3 private investors. This was seen globally as this brilliant way of where capital markets actually got involved and connected investors with countries that were actually looking at better stewardship of the planet, right? So this was done in 2015. And then in 2018, we had a rather interesting one as well, the world's first climate adaptation debt restructure. So this was where we restructured $21.6 million worth of our debt. It was a deal brokered between the Paris Club and the government of Seychelles. It had a number of stakeholders involved, such as the governments of Italy, Belgium, South Africa, the Nature Conservancy Fund, and also the Leonardo DiCaprio Trust as well. So it was a very good example of where stakeholders got together and we saw blended finance in operation. Now, the outcomes of these instruments have also been very interesting. There are 2 things that I would like to touch on here. Part of the agreement for the debt for nature swap was that the Seychelles would secure 1/3 of its economic exclusive zone, which is about 1.3 square kilometers, and declare it as a marine protected area. And this was done in 2020. We declared 30% of our waters a marine protected area, and now the discussion is ongoing as to how do we zone that area up into what activities can be allowed and what activities are not allowed at all. The second, and I think this is where we try to empower our local communities in the Seychelles, is where funds from these instruments were directly channeled towards local communities and projects that were designed to move forward the blue economy agenda, but also look at projects that serve to conserve and protect our marine environment. So I myself have been very lucky to have received grant funding to run projects in the Seychelles that are aimed at pushing this agenda forward. So that's just 2 examples that I would like to give you there.
Thank you, Malchi. And we'll come to the second round of actually really channeling some of these opportunities and instruments to meet those local needs, but also to look at the question of scale, but we will tackle it a little bit later. What I have also been witness to is India is a large economy, right? And there are smaller industries, small and medium scale enterprises, there are cities, there are, that segment of beneficiaries which somehow get crowded out when there is large-scale investments through, say, bond markets and capital markets are being mobilized. So banking sector also comes to a certain degree to fill the gap, but there are also other instruments and other segments of the financial spectrum, like startup financing, like MSME financing, which is very much focused, which is perhaps required in order to fill the gap. Here, I would actually like to turn to Olga now, because when we talk about green transitions, we know that the urban spaces and urbanization will be a key pressure point as well as an opportunity. And you've been working on urbanization and urban spaces in developing countries. Could you just situate the finance question in that realm, and how easy or how difficult is it for cities to mobilize finance, because localization of climate action and localization of climate finance goes hand in hand, right? So I would really like your views and what your experience has been in terms of challenges, and where do you see the solutions?
Thank you, Neha. Yes, indeed, as you mentioned, it's a critical question. First of all, because if we want to meet the climate agenda, we really need to localize the targets. Say if in your nationally determined contribution, you say that you want to reduce transport carbon-related emissions by 30%, then you really need to know who is doing what and when. And a big drawback that happens in a number of countries is that there is a gap between those national targets and then actually sub-sovereign levels to make it very clear on who is acting. Now, let me situate the cities question in this realm a little bit. So cities take about 2% of our planet's land, but they host over 55% of the population, and this is growing. Now, cities, these 2% of land and these 55% of people contribute to 70% of global CO2 emissions. And when it comes to climate adaptation, as per different assessments, nearly 85% of cities, of world cities, said that they have been highly affected by climate-related natural disasters. Now, when we come to finance, on the one hand, we see that cities are really at the forefront of both climate change adaptation and mitigation. But now when we come to finance, so Neha, when you mentioned that in climate adaptation finance, only 30 billion are going out of the total pool of 630, which is about, I think, like something like 3%, which is nothing. Out of that, cities get only 5%. 1.7 billion. And that is for 55% of the population. So really huge disproportion in terms of what cities are getting. When it comes to private finance, that's even worse. So I have a little of an oldish data from the World Bank, maybe dating 5-6 years back, but the trend would be similar. So out of the 500 biggest cities in developing countries, only 4% are creditworthy in international markets, and about 20% are creditworthy on national markets. So there, again, even a bigger disproportion. And so when we think that private finance constitutes more than half of climate adaptation finance, for example, then again, the disadvantage is even further. And even worse than this, so 60% of urban population lives in small and medium-sized cities. And there, so if you see that picture for big cities, for mega cities, these get really nothing. So huge issue in that. And of course, huge injustice, because of course, people who are most affected in cities are people of lower income categories, living in low-lying areas and all the most affected areas by climate change. And so why is climate finance not going to cities. So I'm going to mention a few reasons, intricate to cities and then intricate to the system. So one huge issue that I've noticed in my work in mainstreaming climate change is simply the difficulty of looking at medium and long term, because this is what you need when you want to adapt to climate change and to mitigate climate change. And this is very much related to the political cycle. In the Philippines, for example, the mayor is elected for 3 years. So in those 3 years, you have to demonstrate what is it that you have done so that you can be elected next. When you look at climate action, this is something where you invest into the future. And this is not getting popular. There are ways of doing it. Maybe in the second round I'll touch on what possibly can be done. But this is a big bottleneck. Second huge bottleneck at the city scale when it comes to financing with your own budget, because you could mainstream climate change into your own activities, infrastructure development activities, which are really booming in Asia, for example, and now increasingly in Africa. So there, most cities focus on capital cost. Typically in India, where I lived for many years, when a municipality has to assess a project, it comes to the lowest cost possible. But now, if you look at the life cycle cost, at how much you're going to spend on repairs because you've had floods, because you've had other natural disasters, which you haven't anticipated in your project, your cost over the life cycle is going to be much bigger, but the system is not designed to look at it. So funding is not going there. Huge issue is capacity and data limitation. So data is very difficult to get at the city level. There are very promising ways now with remote sensing, which really I think are the way forward. But in terms of capacity, especially smaller and medium-sized cities, you may just have a few people and one of them has vaguely been aware of climate change. So that pool of finance that potentially you can tap into, you still need to structure your project in such a way to demonstrate what a climate benefit. So if no one is there to do this work, to have this understanding, to have technical data, then it just gets locked. And finally, one issue that I want to mention that is intricate rather to the financial system. So most of development financial institutions, for example, they won't look at projects which are less than 100 million, 200 million. But in cities, sometimes you don't need that much. Maybe just a few millions you need, and that is going to be the most impactful project. So the size of the project versus how those international financial institutions in development and in climate change operate creates a big gap where cities are just left out. So few points which are important.
Thanks, Olga. And one could go into different sectors, right? And one would probably find almost similar kind of problems. Say, take, for example, agriculture. It is the fragmentation aspect of that sector. It is identifying what is green, what is not green. So really beginning from the place where you understand what are the assets that can be invested into and what will be labeled as green is important, both in terms of how banks will lend, how you will borrow money from the market, etc. Manat, I want to come to you because we have, the session is about really created just transitions and tapping the financial means to be able to do so. And one thing is that finance flows where it perceives risks to be low. Right? We heard it in sectors, and Olga mentioned that if the risk is perceived to be high, and if it really is high, then there is a natural barrier to the flow of finance. Now, we also just mentioned that a lot of this finance is locked within the developed part of the world, and domestically it is mobilized domestically, even when it is getting mobilized within developing nations. Now, if we were to look at easing the flow of finance from global north to global south, some of these investments, a lot of these investments will have to be de-risked. And we have heard a lot and more about how the MDBs can play a constructive role in this. I'm wondering how you are, what would your views be on where the conversation is really getting to? Because it seems like there is more of the same when it comes to the role of MDBs in de-risking investments so that the flow of finance can ease between global south, from global north to global south.
Thanks, Neha. No, I agree. I mean, MDBs were initially designed as post-World War II institutions to help rebuild war-ravaged nations. And while those situations are very unfortunately resurfacing today, I think there is a broad consensus that MDBs must expand their remit to be able to accommodate the desideratum of global challenges today, such as climate change, to be able to really exert their relevance and influence in a very fast-changing global world order. I think one, like I think my panelists and you have already spoken about, is capital. They will have to be able to unlock more private capital by leveraging public finance. And how they can do that is by de-risking, providing de-risking services such as first loss capital, credit enhancement mechanism, blended finance, credit guarantees, etc. Second is the direction of capital. Now, while you can provide capital, as I think a lot of us have already mentioned here before, there is a lot of sectoral preferences. There is a debt bias. There is, the capital is skewed at source. There's greater public finance available in comparison to private, even though there's tremendous pool of private institutional capital that's lying idle. Adaptation is relatively ignored. There are sectoral preferences where investments generally go into renewable energy or low-cost transport versus, say, agriculture, land use, or forestry, which are more relevant in a Global South perspective. So I think MDBs really can play an incredible role to nudge finance in the right direction, to nudge capital in the right direction. And I think the third, I would say, is capacity building. There has to be very concerted efforts by MDBs to impart the right financial and technical skill sets to investors so they understand the landscape of the Global South, so that they're more capable and they have the ability and they're more equipped to invest in opportunities in the Global South landscape. And at the same time, invest in capacity building among recipient nations, so they have the ability to very judiciously and effectively absorb that capital at the same time. So I think it's capital, direction of capital, and capacity building efforts would really take us a long way.
Great, and I'm aware of the time running out, so the next round will be slightly rapid fire, more rapid fire than the first. We were talking about de-risking, and Malchi, you talked about World Bank stepping in to structure a financial instrument which helped you mobilize finance. Taking the question back to you then, in the G20 presidency, where India will assume this presidency, and what will be your specific ask, say, of Indian presidency to really put forth, say, the top 3 aspects of how the finance can be made more abundant, affordable to the Global South?
All right, it's a delicious question. So for Seychelles and India, we are strategic partners. We have had diplomatic relations for years and years now. There's a strong Indian contingent population in the Seychelles as well. So what we're hoping for, obviously, is a continuation of those relations down the line. But specifically, I think for the Seychelles, adaptation financing predicted by, I believe, the World Bank, it should be about 300 billion by 2030. We are nowhere near that yet. Seychelles has received adaptation financing in recent years, but it's not. There's definitely a large lag between what is needed and what is on offer. So for us, it is more of having those multi-layered partnerships, those strategic collaborations, ensuring that our voices, because we have such non-traditional issues, being a small island, our voices continue to be heard on the world stage, and a clear commitment, I think, to climate financing goals, however ambitious they might be, moving forward. A very clear commitment from developing countries, developed countries, richer countries, those who are having to put the money in to actually stick to what they say that they would do. Last but not least, there still continues to be this complacency around climate change. We still continue to see it as a future problem and not a present problem. And for small island states, when it comes to adaptation, we are still thinking short term. And I was reading this article from the 90s where the author said, what is the point of putting up barriers for storm surges when your island is going to be submerged in the next 50 to 60 years? So we need to start thinking a little bit more ahead, and we need to start obviously having those partnerships in order to do that. Thanks.
Yeah, and Malchi, and whether all those barriers that we are going to construct are going to be brick and mortar, or there will be nature-based solutions. So there are a lot of complexities, and probably even the type of solutions that you want to implement are a matter of more discussion, more data, and perhaps also giving, usually finance is given to either technology, very hard assets, right? So the soft infrastructure part of it, the nature-based solutions part of it doesn't get enough attention. But going back to you, Gwen, financial sector, especially you coming from the commercial finance sector, all we hear about is also about the level playing field, right? So from your perspective, and connecting to your previous question, what can financial sector itself do? What are those policy options or incentives or even collaborations that you think can help financial firms to actually take a much more proactive role in addressing climate change and climate finance challenges?
You know, one of the biggest discussion points that we couldn't cover here was about why the financing is sitting in the developed countries, why there's that disparity, why it's not coming down into the less developed or low-income countries. And I think anybody who is into finance knows that we always want to target, as you rightly said, assets or opportunities that we know have the highest return. Yeah. But when we're talking about climate financing, it's a bit more difficult. You have to be able to allocate to areas where you might not have immediate return because it's something that is for long term. The aspect that I would like to just also develop before going into what are the opportunities is to say that we all have to remember that there's a gap in capacity. I think some of my colleagues were talking about it. Most economies, most sectors don't have the knowledge leaders, don't have the skill already to fully understand and therefore make the right propositions as to how we can solve the issue. And if you go to Africa, where I'm more familiar with, you know that the banking sector, the financial sector, the financial markets, however you want to call it, in general, is still very plain vanilla. We are still doing normal lending, traditional lending models, and now when you have to come to start talking about new products that can fit this new segment, you need capacity. You need to upskill people to be able to do the necessary to give these facilities out. That's where the first thing that we'll need is partnerships. African countries, Asian countries that might not be at the same level as more developed countries would need those partnerships for technical support to be able to share. The second thing is that there are opportunities because we have now new products that we'll be able to put in the market. We'll be able to do emissions trading, we'll be able to do weather derivatives, we'll be also able to come up with more structured finance products and services focused to renewable energy sources which do not exist today. We'll be able to develop the microfinance segment a bit more because a lot of the players that are going to go into climate change and into all sorts of roles and segments like that will normally be what we consider small and medium-sized enterprises that most normal commercial banks might not have the capacity to finance. Therefore, we have to develop the microfinance segment to be able to give the lending or give the support that those areas would need to be able to grow. And we would definitely need the World Bank, the IMF, to be there to provide the support that the commercial banks would need to be able to grow. And lastly, we have to realize that the guarantee landscape is going to change. Insurers want to insure things that they know. Insurers want to insure areas that they are comfortable with. Now we will need donors, but we will also need insurance companies and other third parties that are willing to take this risk that for now is an emerging risk that is still largely unknown. They will need to be able and willing to give the guarantees, give the insurance and the support that the commercial banks will need to be able to deliver on giving the support in terms of financing. So it's something that it's very highly complex, but if all of the stakeholders at the different levels, bilateral, donors, commercial banks, all come together and are willing, you know, to put the focus and the means necessary, we would and we should make sure that we can finance the climate change, because once it continues and once we continue to see the disasters we are seeing, the types of natural events that we are all witnessing, once our communities and our economies are destroyed, there is no business, there is no wealth, there is no prosperity, because the resources that we all need to thrive on and to survive will gradually disappear.
Olga, let me just come to you. And while financial sector can make finance available, but one has to know where those opportunities lie. One of the things that we see is that capital is there, solutions are also there, but the demand outstrips supply, especially when it comes to capital which is actually chasing green projects. Now, in the context of cities, could you just highlight what would be your priority sort of end users where the climate can flow easily and quick action can be, really actualized?
Thank you, Neha. I want actually to highlight one very important point when it comes to climate finance in cities. So cities, when it comes to non-grant finance, actually most cities can't absorb that much capital in terms of borrowing. So for example, a typical medium-sized city maybe will have 1 or 2 loans that they will service for 10, 15, 20 years. So now what is absolutely critical for the sake of the city is to really decide wisely where is it that you want to go for finance. And so here, we at Unicity are really pro ecosystem-based adaptation, nature-based solutions, and there is a reason for that. So essentially, a lot of climate issues can be addressed through non-structural solutions, for which you need limited finance or sometimes no finance at all. So just to give you an example, which really works in most cities, you always have, I mean, it's been encroached upon a lot, but you do have certain areas which act as buffers for climate-related events. For example, when you have a monsoon, which is the case in most Asian cities, then you have heavy rainfalls, and this water needs to go somewhere. So when, like in Jakarta, 97% of your surface is paved and not permeable, you get floods. Now, if simply by a political decision you say, okay, this area, this green area, I protect it and there is no development going to happen in there, you can already activate this solution without even any funding. And now coming back to that issue that I was mentioning of short-term kind of political view. So the beauty of those non-structural approaches is that they create numerous co-benefits. So for example, Mayor Sri Risma Karini in Surabaya in Indonesia has created a wonderful project of connecting 7 parks, creating social spaces for people from different economic backgrounds, and really solved the flood issue and became very popular. She was re-elected several times. So those kind of solutions, once, first of all, you see what is it that you can address with your own means without that much finance? This allows you then to understand where is it that you actually need to take this borrowing. And then in a very informative way, then also with international assistance, which in these cases is useful, you can structure your project and then bring it to financial institutions. Now, the second point I was mentioning of the project size, so with an ADB project on which I'm working right now, we're actually discussing on how we involve the national level at helping bundle projects across cities, for example, transport or flood-related project across cities, or several cities coming together to apply for funding. This is also a very useful approach where you can tackle this barrier of minimal project size that financial institutions usually require.
Thanks, Olga. Now I have to come back to India because absolutely critical in the sense, because we're assuming G20 presidency, because sustainable finance is a core agenda item over there. I feel that there also needs to be some kind of demonstrable successes that the host presidency should be able to propose, based on which certain suggestions can be carved out. I have been involved in a lot of dynamics, a lot of suggestions, a lot of work which is happening within India. But Manat, you've also been investigating the space, so to speak. So according to you, having heard, what are the different segments which need to be included in the access to finance, what are the barriers, et cetera, what do you think can India propose as demonstrable success at home, which can actually be a blueprint for developing nations?
That's a great question. Well, I think India's G20 presidency is definitely a great opportunity for us to address many of the challenges that we face in the global financial architecture. To begin with, one, and I think you've also worked on this, is building a taxonomy for India. So I think what we really need is an interoperable taxonomy. Currently, what is green, what constitutes green, there's plenty of ambiguity around that, which has led to a lot of greenwashing concerns. So I think if we can come up and agree on an interoperable taxonomy, that would really help us in facilitating and channelizing investments from around the world in green sectors and green industries. Second would be, I think, how can we strengthen both disclosures and investment criteria? We know that lenders, insurers, investment banks, they all look at data when they make their investments. Now, while that is critical, it's also important that we encourage investment banks and encourage institutional capital to look at factors beyond disclosures, which is how can we sort of, to come up with an approach of basic standardization and significant localization. So I think at India's G20 presidency, if we can encourage a lot of these institutional financial banks and MDBs, etc., to unlock greater private capital towards the global south at concessional rates, most importantly, because there is plenty of money and global south nations can get that money even today. The challenge is not getting the money, it's getting the money at concessional rates, it's getting it at right rates. So I think that's where G20 can play a really important role in coordinating, collaborating with nations and coming up with an agreement of how to provide that capital at right rates for the global south nations, which is in line with the principles of climate justice, climate parity. And I think third would be, and I think we've spoken about this before, capacity building. We need to equip investors to be able to invest in nations. We need to equip recipient nations to absorb that kind of capital. And I think we've also spoken about, India has just come up with in its budget that we're going to be launching the sovereign green bonds. We have municipal green bonds, which have become a very popular template in India, or they're trying to be a popular template in India to be able to raise money for local communities and local infrastructure projects. And it's a great way to sort of strengthen local governance. So I think these are great examples coming out of India. We're coming up with our own taxonomy. Very recently, SEBI made it mandatory for top 1,000 companies to be, disclosing to be disclosing their data around ESG matrices. So India is taking great strides. We need to be able to collaborate and cooperate with members in the G20 to scale those efforts, to have greater interoperability between our priorities and efforts, so we can really create a greater impact. And I think fourth would be, and I'm not sure if India's G20 presidency is going to take this on, it's probably a little too early on to say that, but would be carbon markets. It's so important that we internalize the price of carbon so we can move investments away from fossil fuels, because currently we don't do that. So I think internalizing the price of carbon, maybe pushing for a carbon market, carbon pricing mechanisms at India's G20 presidency will probably help us achieve that going forward in the next few years.
Thanks, Manat. And with this, I have to basically open the floor to some questions from the audience, if you have woken up amply after this discussion. So here's the floor to you to direct your questions to one or any of our panelists. Yes, we will take about 5 minutes to have some questions from the audience. Yes, please. Please introduce yourself.
Good morning. I'm Hasegawa from Japan Bank for International Corporation, JBIC. It's a public financial institution. We are quite active also in the climate financing. I said active, but we are trying to be active. That means we are ready to finance the climate project, But it's also, as Madam said, that for finance, it is very requisite to find project which has a commercial viability. So to find a project which has a commercial viability is a very it's not an easy challenge for us. So I completely share your view. And it's not my question, but just a remark about the municipalities financing. Yes, yes. For our side, JBIC is also quite financing many nationals, sovereign level, but we have been trying to enlarge our financing to the local level too. But it's really true that we need to given the credit we need to proceed the credit analysis, not only for national level, but sub-sovereign level, municipalities level. But it's not easy for us to get enough data to have the to give the good credit analysis for small, medium-sized municipalities. And so I'm completely sure what you said, that the lack of capability from the side of the municipalities and the lacking of data, it hinders financiers to give enough financing sources for municipalities. And having said that,
if you could just keep the remark a little bit short, we're already over time.
I'd like to share just one small initiative by the governor of the Tokyo government, local Tokyo government. It's not related to financing, but recently local government of Tokyo obliges the new buildings to install solar panel or other renewable electricity equipment. I think apart from the financing to the project, such obligation to the local habitants may be one way forward for local municipality who has not yet equipped enough financial sources.
Thank you. Any other question? Because that was a long remark. Yes, sir, please.
I have one comment and one question, and my comment is about the capital movement from the north to south and the role for the MDBs. And I see as the current situation, the MDBs are very constrained. One is they are looking for the bankable projects. These are not readily available. And the second thing is they are too dependent on these credit rating agencies. So these two things to be tackled, and otherwise MDB's roles will be limited, and they will be doing this. Maybe the G20 may look into it, whether this project facilitation process could be done by the MDBs. My second is about the bond markets. We do have the green bonds, so you mentioned about the blue bonds, but what is really needed is this taxonomy and to give that kind of things. So what is your position? And still it is a bond market are spreading in the local currencies and also the dollar dominated. And what could be the future of this taxonomy at the regional level, at the global level?
Are you willing to take this question? Yes.
I'll talk about the blue bond sector, and then perhaps someone else can step in as well.
We just have...
The rest of the conversation during the break, we will have one answer for this question. We have overtime. And we have flights to catch today, actually.
The first blue bond was launched in 2015, and there have been 6 blue bonds that have been uptaken since then. There is obviously a lot of reliance on how Fitch looks at and rates the blue bond, but there is a lot of potential in it. Thank you.
Okay, so thanks a lot for this session, and we've really run out of time. Solutions exist, capital exists. I think it is a matter of coming together with the political will to make finance available for climate justice and climate transition. Thank you so much.
Thanks.